Good morning, investors. Welcome to another webinar. It is Wednesday morning. It is the Consumer Price Index report release day, which we already got news, by the way, of the Consumer Price Index level. And I want to go over that in just a minute. If you are brand new to the webinar series here with us at TipRanks, my name is Ari Gutman. I am a customer success manager here at TipRanks. And every single week I'm jumping on to live webinars just like this one. On Mondays, I'm in with our premium and ultimate users. And on Wednesdays, I'm here with you all. Now, the difference here is on Mondays, you get the news ahead of the entire week. And most importantly, you get to use that featured tool of the week that we go over before a lot of the news comes about. So without further ado, I'm going to get started with our economic backdrop. Last week is where I want to start because what happened yesterday will impact us today. What happens today impacts us tomorrow. So I actually want to start off before I touch the Consumer Price Index report, the latest reading. I want to get right into talking about what happened last week with Federal Reserve Chairman Jerome Powell coming out of that blackout period and raising rates by 25 basis points. Now, if you've been on these webinars with me week to week, I have been saying, and I've been a pretty staunch advocate here, that the Federal Reserve will continue to remain pretty hawkish. Now, my stance on rates being raised actually came because of a few months back when we had our banking crisis. They were going to raise rates by 50 basis points. Now, the banking crisis had occurred and we got a 25 basis point rate hike. So coming around to this last rate hike, was under the impression that they're most likely going to come out with another 25 basis point rate hike. That's exactly what we got. Now, I believe that for the next few interest rate hike decisions, we will see a more dovish Federal Reserve, aka they're not going to be inclined really to hike interest rates as long as the economic data sets that come about make sense and allow them to really take a pause on raising rates. Now, they did achieve their goal here of getting to about a 5% terminal rate. That was their goal, to get to the 5%, a little bit above that rate. So that's where we are right now. That's why I foresee looking ahead, as long as, again, the economic data sets allow us to take that pause, it's likely the Federal Reserve will be pausing moving forward. But let's jump into Friday of last week, because that was also incredibly important. On Friday, we had brand new employment numbers come out, and we were expected to add 180,000 jobs to the U.S. economy. Of course, it took everybody by surprise yet again when we got 253,000 jobs added to the U.S. economy. Now, every time there's an employment report coming out, I do speak to them because this is speaking to just how robust the labor market is within the United States. And why is that important? Because that's almost fueling ground really for the Federal Reserve to continue, if they needed to take that hawkish approach and continue to hike rates. Now, like I said, it takes time for the Federal Reserve to really analyze the data. And of course, once an interest rate hike goes into effect, that also takes time for the impact to be felt. And so what I'm expecting now moving forward is, again, a dovish Federal Reserve. So no longer this hawkish tone that they're going to be using, but certainly it will all be dependent on the data sets that come about. So today we had now the Consumer Price Index report come out. The report as of this morning read that in April, inflation is now at the level of 4.9% inflation. So again, if you were with me on these webinars, we've been talking about looking at the Federal Reserve and then looking at inflation and really using these as our market mandates. Now, as we saw already now with the CPI report out, inflation's at 4.9, down nominally from 5% as of the last reading previous to today's. What does that mean for all of us right now? It means a couple of things. First and foremost, we still have a very robust labor market, which is good news because it really is coming about that, hey, we may really be able to pull off what Jerome Powell has really been hoping to pull off, which is that very soft landing. We have a robust labor market. Inflation is slowly but surely coming down. Time takes time. It's likely that we're going to be continuously living in this environment of higher interest rates and higher inflation until the end of 2023 and entering into 2024. So the question now that comes to mind for investors is, well, how do we really invest in this type of environment? And knowing that inflation is still high here at 4.9%, considering the Federal Reserve's goal of getting it down to 2%, and an interest rate that's going to be at that 5% level for most likely some time here. Again, looking like heading into 2024, what does that do to businesses? Well, it puts stress on consumers, it puts stress on businesses, and it's really pressurizing on both fronts. So in knowing that, if the best case here is we get that soft landing, that's ideal. Is it likely? It's really anyone's guess here, as long as we get inflation that's continuously coming down, and of course, a more dovish Federal Reserve moving forward. However, because we're going to be in this environment that's very pressuresome to businesses, the consumers, we're still going to feel that economic pinch. So what am I now sharing with all of you to really do is, of course, doing all of your due diligence is of utmost importance. But now, most importantly, is the investments that you're looking into. What type of criteria should we really be using as investors? And I always say it comes down to 3 golden nuggets really worth of criteria for us as investors. First and foremost, we want to look for businesses that have phenomenal leadership teams. This is great management teams that, regardless of what's happening economically, the leaders that are in the right seats will be able to guide their companies, their businesses through the mayhem of whatever market uncertainty comes our way. That's the first golden nugget. The second golden nugget here is a balance sheet that is squeaky clean. So what exactly does that look like? What do I mean by squeaky clean? Little to no debt, best case, like no debt, but little to no debt here, and a profitable operating business. The third golden nugget here I want to talk about in terms of our investment criteria is a strong brand name. Now, a strong brand name is incredibly important because it's the tried and true consumers who continue to go back to the products, who ultimately at the end of the day will transact with the businesses that are trusted, that are well-liked, that are popular brands. And so with these 3 pieces of criteria, this is what I'm really suggesting that we all begin to really look into in terms of the investments in the next 3 months, 6 months, 1 year out, really until the coast is clear and we are back in an economic environment that we're not, one day the market's up, next day the market's down, and we're teeter-tottering based on economic data sets. Now, we have been seeing a lot of this back and forth because it's a lot of emotional investing that's going on. So I'm not a fan of emotional investing. I am a fan of finding quality, high quality businesses, investing into them, and really taking part as a business owner, if you will, as a stakeholder into these businesses. I like to sleep at night. So with that being said, I want to share my screen with you all and go right into our TipRanks tool of the week. Now, we are on the TipRanks homepage. I hope you're all very familiar with this page. The first place I want to go to is research tools. Now, TipRanks, as of recently, has been working pretty diligently here, the teams in this office, to make sure that we are simplifying the user experience for everybody so we can take every investor exactly to the place that they need to go. So you'll notice now we have our sections here: top stocks, dividend investing, ETFs, stock comparison tools, and then we have calendars here on our right-hand side. I want to focus in on today, dividend investing. Now, in all transparency, I'm excited about today's webinar because I am personally a dividend investor. So you're going to get a sense of when I come on to TipRanks, what exactly am I doing? What am I looking for, especially when it comes to dividend stocks? But most importantly here, why dividend stocks? Why am I even talking about dividend stocks today? Well, because regardless of, again, that economic environment that we may find ourselves in the next 3 months, 6 months, 1 year out, it's the tried and true dividend investors here who tend to fare well regardless of the state of the market. That's why I love dividend investing. Of course, you have to play to your tax advantage accounts, make sure you understand the tax implications of dividend investing. But a lot of these companies that pay dividends, they're very safe companies, and they will continue to be so. Again, they meet our criteria. Many of them meet our criteria here of having strong leadership teams, of having clean balance sheets to even be able to pay out that dividend, and last but not least, strong brand names. So without further ado, let's get going here. I want to stop into our best dividend stock section. So right off the bat, you're going to notice that we now have a list of the best dividend stocks, US based. I want to highlight that in front of us. Now we'll see right at the top, we could just take a quick glance. We got Apple at number 1, Nvidia at number 2. So already some interesting plays here because Apple's not always considered a dividend player, but it does have a strong dividend, at least for a tech company that they shell out, a very reliable company. But what I want to do with each and every one of you here on this webinar is really begin to take our economic backdrop and input it now into how we're using our TipRanks tools. So this list you're going to notice is about to change, and it's going to change depending on how I utilize the market cap here, drop down, as well as sector. So in knowing that in the next 3 months, 6 months, 1 year out, businesses may be feeling, again, that pressure from higher interest rates that are higher at higher levels for a prolonged period of time, in conjunction with inflation that is still above this Fed goal here of 2%, which makes it really high inflation at 4.9. I'm going to go towards playing it much safer than I usually would, say, if we weren't in this economic environment. So I'm going to go ahead and check off mega cap, large cap. We'll keep it at mega and large for today's webinar. I want to go out 1 over, and again, playing it safe and just thinking ahead of the game and trying my best to predict what the future may look like. Again, no one can be absolute 100% certain on what the future looks like, but as investors, we try our best to do exactly that. So I'm going to go ahead and check off a couple of the sectors here that continue to perform regardless here of the state of the economy. Through the ups and the downs, we have healthcare, consumer goods, and utilities. And you'll have noticed now that the list that started off with Apple and Nvidia has completely changed. Now I can continue to play around with this list depending on what I'm looking to do, but just for today's webinar, I want to take a quick scroll down here, and I now have a complete list just based on simple criteria, market cap and sectors, playing it safe, and now a brand new stock list that I call each and every one of these stocks that are listed on this page, stock ideas. Now, I say that because we have a lot of investors, whether it's on TipRanks or other sites, that will jump onto a website. They'll see that, say, an analyst has analyst consensus rating is a moderate buy or a strong buy. And all of a sudden, we see investors adding these positions to their portfolios just based off of an analyst consensus. Now, I want to red flag that and really stress this. These are stock ideas. This is where your due diligence really begins. So I'm going to go ahead and just click on TJX here, the ticker symbol TJX takes me immediately to the Analyst Forecast page. So right off the bat, TJX is TJX companies. Think home goods, think Marshalls, TJ Maxx. It's a discount retailer for really clothing and as well as home goods. I want to head over to stock analysis. Again, as I would always do coming on to any one of these pages, because this is what I consider a stock idea, now the due diligence really begins. So if you've been utilizing TipRanks, you might be very familiar here with our TipRanks Smart Score. So an 8, 9, or a 10 is really what I'm always looking for. 8, 9s, or 10s means there's a strong or high likelihood that the stock will outperform the market in the longer term period. So say about 12 months out. Again, this is to say that if I invested into TJX companies today or tomorrow, based on what I'm looking at right now, it's not to say that this stock is going to 10x or 20x in the next 24 hours. This is to say this is a longer term investment. We can scroll down here for some other indicators here at a glance. We have bullish blogger sentiment, which is always good to see. We can give that tab a click and take a look at what bloggers are saying what. I like to see that there is positive crowd wisdom here. Now, crowd wisdom, for those of you who are brand new to TipRanks, is really what other investors across TipRanks are doing. So it's nice to see that there's an increase in bullish activity here when it comes to TJX companies. Now we have hedge funds activities that have increased. Another thing that I like to see is smart money. The smart money moves that they're making. Give that a click and even see the exact hedge funds that have either added to their TJX company's position or began a new position entirely. But again, this is from just taking a look at a glance here of a stock idea now that I can add to my stock watch list. Now, it is up to each and every investor to continue to do this due diligence. We are here today for the dividends. We'll go ahead and click on dividends. And we can see now here we have the dividend yield at 1.5%. So not the largest dividend. It's actually below the sector average here. You can see that right below dividend yield at 1.5%. And we get the sector average, which is something nice to see. But there are questions that come about from looking at a stock like TJX companies. For example, in knowing my economic backdrop and thinking ahead 6 months to a year out, if there is to be a light or mild recession, it's not that people stop shopping. Of course, they don't shop as much, but people don't stop shopping altogether. And they actually, as we've seen the past downturns, they go to their discount retailers, whether it's the TJX companies or Walmart. That is where they are most likely to go. So it might be an interesting play here. Again, a stock idea. We continue to do our due diligence. Now I want to go back to research tools, and one below best dividend stocks here, we have best high yield dividend stocks. So again, keep in mind TJX companies is 1.5% dividend yield. If I click on best high dividend stocks, again, US based here, I now have another list of our high yield dividend players. And again, I can go back to market cap and I can keep it safe, mega and large caps, go to my sectors, healthcare, consumer goods, and utilities. And I have a brand new list here. Again, a filtered list that is dwindled down to another set here of stock ideas for myself that are now high yield dividend players. So let's just, in the hypothetical here, assume that I know absolutely none of these companies and just click on the second one here. Takes us to EOG Resources. Again, the hypothetical is I know absolutely nothing about this stock. I will always come to a year to date to get an overview of how this company has been performing. So a lot of investors, especially new investors, might get scared away or spooked away here when they see red. For me, as a more experienced investor, I like to see red because I want to catch it on the downfall and, of course, be able to profit when it's on that comeback. But let's just say, again, I don't know about EOG Resources. I want to scroll down. I want to get my company description. Here's where I'm going to start as an investor. My company description and start to understand the company. What do they do? So now I know that they're an energy player. I will come back up and at a glance, just look at some of the indicators over here. So a TipRanks Smart Score of a 10. Analyst consensus here, a strong buy. So at that glance, it's looking pretty good. Bullish blogger sentiment, increased hedge fund activity. Again, I like to see that as well. And my due diligence continues. Head over to dividends. And now this is a better looking yield, at least for me here, at 7.84% worth of a dividend yield at a sector average of 2.99%. Not too shabby. So this is all generated from going to research tools and best dividend stocks and best high yield stocks, just from understanding the economic backdrop and then going into dividend investments. However, one of our greatest tools that I think is really underused on TipRanks, and I've come to discover this, that this particular tool is underused by getting on a lot of customer experience calls, is our stock screener. So our stock screener is really going to help me filter out a lot of stocks and zoom in on the stocks that I want to focus in on. So you'll notice it's actually already plugged in. This is something that I'm constantly doing as a dividend investor. But what we would do is jump onto our stock screener page here. And again, we can keep it to mega and large cap, just to give everyone a sense of what this will look like if absolutely nothing is checked off. We have a long list. I mean, literally over 1,000 stocks here on this stock screener tool that we can sift through. And as investors, what we tend to do is we have our 5 or 10 or maybe 15 for some of us portfolio of 30 stocks that we're very familiar with, that we're invested in, that we talk about quite often, and talk about this idea of groupthink, right? Always thinking and talking about the same ideas. Well, in some cases, it's like stock think, right? We're always talking and thinking about the same stocks. Come to our stock screener page, and we can find brand new stock ideas, which is something I absolutely love to utilize. So again, let's think about that economic backdrop the next 6 months to a year out. Where may we be, contingent upon our economic data sets, contingent upon how businesses are feeling, if they're stressed, if they're not stressed. We come to our market cap. Let's play it safe with mega and large caps. Head over to price target. At this point, it gets really fun because now we can sift through an entire list, over 1,000 stocks here. But who wants to look at the stocks that are perhaps going to experience some downside? Let's look for upside stocks. So upside of over 20%, upside of 10 to 20%. And because we're here for the dividends at this point in time for this particular webinar, we will hit this dividend yield drop down. Let's go very high to high dividend yields. Keep it safe again with a smart score of 8 to 9 or 10. Before we even touch the sector, we see now we have a list that is down to 24 stock ideas. But if we want to come back up again, let's just stick to consumer goods, healthcare, and utilities, because that's been the name of the game. Now we have a list here of 6 stocks that are fantastic ideas, stock ideas, potential opportunities contingent upon our due diligence. So again, just clicking, I'm going to go to the bottom here. NextEra Energy Partners. If I had no idea what NextEra was all about, I would come right to the stock analysis page. I would scroll down, get an understanding of what the company is all about, this company description. Okay, an energy player, I come right back up. And now I get at a glance this TipRanks Smart Score. It's at a 9. 8, 9, or 10 means there's a strong likelihood that it's going to outperform the market in the next year or so. That's a good sign for me as a longer-term value investor. I come down to my analyst consensus. I get a moderate buy. Bullish blogger sentiment is out there. Increased hedge fund activity. Now, this particular one, insider transactions, I want to highlight because this is arguably one of the most important tools on TipRanks, bar none. We can take a look at what insiders of the company have been doing. Now, insiders are anybody, whether it's a stakeholder or perhaps somebody in that C-suite. So the CEO, the CFO, the CTO, anybody who's making those insider calls to buy their own stock. And we can get a good sense of who that insider was. So at director level, 12 days ago, purchased stocks of NextEra Energy. The question for me always comes about when I see insider buys or sells is, why did that insider make that buy or sell? What prompted them to do that? Did they have the information on their desk? Most likely that has led them to make a call on whether or not to buy or sell the stock. Come back to stock analysis. We get this overview here. Again, we are doing our due diligence as investors. Off to our dividends, a nice yield here of 5.86%. It is above the sector average, but that sector average coming in at 2.99%. Now I want to pop back on the screen with all of you. And I want to share with you some closing remarks that we just had. As I mentioned, to kick off this webinar, the Federal Reserve come out last week, hiked interest rates by 25 basis points. Our terminal rate now is around that 5% mark. And just today, not too long ago, inflation came in at 4.9%. We are certainly, at least, I want to say battle by battle, getting inflation to come down, but we still have quite a ways to go. That leaves us in an economic environment in which businesses, once again, will likely be experiencing that pressure, the stress from 2 things: high inflation and the interest rates being raised. How will your investments fare? And I want to leave you with this last remark here, and that it is not the time to stop investing. It is simply the time to take a pause, invest in yourself as an investor, become an empowered investor, take the next step and actually getting the tools in your investor toolbox to make sure that you can find the golden nuggets that are out there. the diamonds in the rough, if you will, because there are plenty of opportunities that are out there that we can still invest into. And then last but not least, keep your eyes out actually on your email, your inbox right now, because I just had an email sent your way in which you can take full advantage of a nice little coupon that I'm going to extend to you because it is CPI day and it wouldn't be a TipRanks webinar unless I shared with you that that email is in your inbox to level up as an investor. Investors, good luck investing today. Happy investing for the remainder of the week. I look forward to seeing you all next week back in hopefully the Monday's webinar.